It's been almost 3 months since we started living in a lockdown mode. The lockdowns at that time when it started seemed like a relatively good solution for what we thought could be a temporary problem. And now thinking back, it looks like it was just probably a temporary solution for what could turn out to be a permanent problem. So for my update today, we're going to start with taking a stock of where we are with COVID-19. Second, I'll be focusing a little bit more on the Canadian economy. And lastly, I have a few suggestions for looking at your financial portfolios given the macro environment that we are in. Greetings viewers. You're listening to Aman Sangha, Independent Financial Advisor with CART Wealth, based in Mississauga, Ontario. So for the first point, let's look at the COVID-19. Now it's been almost 3 months since we've been living in this lockdown mode, and it looks like as if the news stories have already turned, and the headlines have changed to the point that this problem has somehow disappeared. Anything could be farther from the truth. So when I shared this chart last time, it looked like the curves were either flattening or they were on the downward direction. Now this month we have two new hotspots from the emerging markets, and worldwide there have been about 6 million cases, and just in the US alone there have been over 100,000 deaths. So the way I look at this is probably here to stay. It'll be here for us for the next little while, and probably the best probable solution for us is to be able to learn to live with it or to live around it. And probably that's one of the things, that's the thoughts that we are seeing reflected in the returns on the financial markets. Now, if you look at the numbers year to date, S&P has been the most resilient of all the indexes, whereas the other markets are about 1/3 there from their previous peaks. Now, which brings me to my second topic for today, which is the Canadian economy. Now, Canada was a bit harder hit than our neighbor down south, the US. And primarily that was two reasons: the slowdown that was brought on by COVID-19, as well as the crash in the oil prices given the price war. Now, the good thing was that the federal government and the Bank of Canada saw through the severity of the downturn. They acted quickly, and they boosted measures, they put in place measures to boost the economy, or at least hold it up till we get through this pandemic. The downside is that the government has taken up a lot of debt. And now what that means going forward is either we're going to have less government spending, which is going to slow down our GDP growth, or we're going to have more taxes, or we're going to have both. So this story, or the impact of the pandemic and its underlying on the economy and growth in future years, it's still unknown. We'll only know in years to come. And that's where I want to bring in my third point. We have a changed macro environment, and we need to look at our financial plans, our investment portfolios, our retirement portfolios in context of this new environment. So the first thing that we need to look at is our asset allocation. Now traditionally a 60-40 allocation is a most trusted rule of thumb in a lot of investment accounts out there. So you really have to look at it. A 10-year bond, 10-year treasuries are yielding little more than 0.5%. So in that macro environment, you have to think if a 60-40 portfolio still meets or helps you meet your retirement goals for whatever investment objectives you have set for yourself. Now the second thing that has brought this COVID-19 outbreak is the sense of mortality people have been feeling around them. And surprisingly enough, the insurance companies have relaxed their non-medical requirements into getting additional or just new coverage. So I just want to summarize that third point by saying this. Like, if you want to have your portfolios relooked at, or you were thinking of initiating new or additional coverage for either life, critical, or disability, you know the number to call. It's 905-363-5035. That's it for me for the month of May. Bye for now, and thank you so much for watching.